Gold and silver both traded range bound yesterday with a slightly bearish bias, achieving the highs. Both dropped towards the US session. Now, what is going to happen today? Which position we should take in order to make profit, we will see with the help of candlestick charts and indicators. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon. First, we'll look into gold, followed with silver, and yes, the next update on gold will be up before the US cash session, so do watch that also. And if you are interested into other commodities and markets including US crude, natural gas, Dow Jones, Nasdaq, FTSE, Germany or Nifty, you can watch those analysis as well. Do press the bell icon. Let's start the day with gold first. Now this is the hourly chart for gold. You can clearly see 1715 provided it a very strong support. I have reiterated it again and again. I have emphasized in each and every video that now on the downside yesterday that 1715 should provide a very strong support, and below that also there is next support at around 1710. If these two are taken, it is going to crash. It failed to break past and it is sustained above these levels, now trying to give you a breakout. It has created a base at 1715 and now at around 1718 trying to rise again. But remember, it is giving you lower highs and failing to go past 1735 now. So again 1730-32 zone you have to be watchful of today. If it breaks past 1732, you can go long and you can expect 1735, 1740, and then beyond that it is going to fly. If you look at the directional movement, not indicative of anything. However, it has just crossed over and it is divergent also, indicating little bullishness. The stochastic is looking upwards and the MACD has just crossed over for a buy sign. And if you look at the RSI, this is also looking upwards. So couple of indicators are indicating that it may act little bullish from here on before it looks forward to a drop or a rise. Yes, if you look at the 2-hour chart, see on the 2-hour chart, this is the first base. Now it is the second base here at 1715. And remember 1715, 1712 and 1710, these levels, this zone you have to be watchful and you have to be careful of. Look at this, it has given lower highs and it is trying to give you higher lows. So it is trying to consolidate in this zone. Be watchful till 1732, 1735 levels, and on the downside be watchful of 1715 and 1710. Directional movement bullish, stochastic looking upwards. The MACD is trying to converge. Right now it is on the sell side. It is trying to converge and crossover. RSI is looking upwards with a slightly bullish bias. And if you look at the 3-hour chart, see on the 3-hour charts what it has done. If you look at these formations, see it has created a higher base earlier, gave a breakout. Now it has created a lower base, trying to give a breakout. So see, it may repeat this pattern, consolidation, lower highs compared to this, and now again trying to achieve lower highs, and then probably the next candle will decide which direction it takes. If this time it breaks below 1715 and 1710 zone, it is going to crash on the downside. And if it breaks beyond 1740, you can see a very strong rise. You can expect a very strong rise in gold on the upside. Directional movement bullish, stochastic is at bottom, now trying to look upwards from here. And if you look at the MACD has crossed over on sell, trying to converge again. RSI is looking upwards here. Similarly on the 4-hour charts, if you look at, see previous two candles, lower highs, higher lows. This is a breakout. At the same time, one must not forget that it is giving lower highs and it is giving lower lows. So it is trying to create a channel of its own. The resistance there at 1732, 1735 is strong. Only beyond 1735 I'll expect that it may show some bullishness. Then the 200 period moving average at around 1738 will come into picture, which may give it a little resistance. On the downside, yes, there is a definite support at 1715 levels. If it breaks below 1715 today, you can go short, and then 1710 levels will come into picture. Below that, yes, you can expect a fall. The directional movement is bullish. The stochastic is at bottom, now trying to rise from here. The MACD is not indicative of anything. RSI is looking upwards. And if you look at the daily charts, see on the daily charts, now look at this. This is here at the 50 period moving average, giving it a little resistance. And see, it is trying to hover around this. Look at these last two candles. Lower highs is what we can see. At the same time, one must not forget lower highs, higher lows. So it is trying to create or consolidate within this bit before the Fed declares the interest rate. So it is trying to consolidate or trade sideways. Be watchful of 1715 and 1735 levels. Once again, in between these $20, it may try to swing. Any drop below 1715, just stay short. If it drops below 1715, you can go short. See, this is the first red candle. There could be a follow-up red candle which might bring it further down, and then it may hit 1710, 1705 and 1698 levels. So be watchful of 1715. It can try to achieve this. It can try to achieve the lower highs and reverse from there. Chances are less. If it is bearish, it has to reverse from somewhere here itself. And be watchful of now 1730, 1735 zone. So in sum, it appears it is going to again give you a sideways move. That is what it appears till the time it trades between 1715 and 1735. In between these $20, we have to trade with caution. Directional movement is bearish. Stochastic is at top. The MACD is wide, divergent, and it is still bullish. RSI is again looking upwards. So now look at here. If you look at this, it has created a base here now at around 17-18 levels, and with that as base, it is trying to rise. And also we have seen on the 4-hour chart, it is giving a slight breakout. But remember what we have seen yesterday, that it created a base, gave a strong breakout candle, and then dropped. Similarly, it reversed and erased the complete gain with a reversal candle with a red candle. So be watchful. It can still give you a swing again today, and it may consolidate a little in between 1715 to 1735 levels itself. Rather, today you should be watchful of 1718 again. See, I told you yesterday, below 1718 you can expect 1715 levels, which should provide a support. Today again the same phenomena is applicable. Below 1718 you can go short for just $3, nothing more, nothing less, just $3. And below 1715, if you see, then it is a bonus on you. So please trade or go short at 1718. At the same time, if you see it at around 1732, go long for just $3 at around 1735. So rather, I will say better stay away from 1715 to 1735. If you are taking a safe position, better stay away, and in between this $20, be cautious. So this is the tip for the day. Now let's have a look at silver. Silver on the hourly charts gave a break below 1840 yesterday, achieved 1830, and now again created a base at 1840. 1840 is definitely a very strong support for silver now, and then now it is trying to attempt and achieve 1860 levels in next resistance zone. See, previously it was 1880 to 1860. Now it is trying to create a lower zone at around 1860 to 1840 levels. It may achieve 1860 and then drops up from there. Possibility exists. Also look at this. It is trying to give you lower highs, lower lows, and hence be watchful of 1860 there. Yes, 1860 may get achieved before it looks over to a drop. Any move beyond 1860, we have a next resistance zone at 1870 and then 1880. Any move beyond 1880 should be considered as a bullish reversal. We can expect a flyer beyond those levels. Directional movement, it is bearish, trying to converge crossover. Stochastic looking upwards. The MACD has already crossed over for a bullish move. RSI looking upwards here. Similarly, on the 2-hour charts, it is trying to give you a breakout with a support at 1840. It may try to attempt and achieve 1860 levels, and then beyond that also is possible that it can hit 1870, which is the next resistance zone, 1870. So on the daily charts, yes, it is giving you lower highs and higher lows, trying to consolidate. And yet again 1818, 1880, 1830 is the larger trading zone, which it may try to swing in between. And yes, do not trade between 1840 and 1870, and in between these 30 points you have to be cautious. However, on a larger trading zone in between 1830 and 1880, you have to be cautious. It is trying to show you a swing, and hence be alert, because any breakout above and below will give you definitely a stronger move. If it breaks below 1830, we can expect a sharper drop, which might take it below 1800 levels. And on the upside, if it trades above 1880, yes, you can expect 1890, 1900, 1910, 1920. On the upside, 1920 is something you should look out for. Any move beyond 1920 should be a good indication for a bullish reversal for near term, and you can expect 1950, 2000 levels soon to be hitting in silver. But be cautious and let it take a direction. Do not trade without taking it a direction. Till that time, in between these 50 points, in between these 1830 to 1880 points, you can enjoy and make this profit out there. In between 1840 and 1870, the next a smaller conservative zone. In between these 30 points, do not trade. Below 1840, you can expect it to drop for 1835, 1830, and below that a stronger cash. Above 1870, you can expect 1875, 1880, and then beyond that it will fly. So largely conservative zone is between 1840 and 70. Broadly conservative zone is between You can see 1830 and 1880. In between this, we have to be cautious. Take your positions accordingly. Indecisive as of now, it appears for both gold and silver, and hence be cautious. Take your trades accordingly. Trade with the stop loss, trade with the trailing stop loss. Do not forget to like, share, subscribe, and comment. Do not forget to press the bell icon. Join my mentorship batch, join my VIP signals group. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day. Thank you.